China, the world's second-largest economy, once hailed as the unstoppable economic dragon, now faces uncertainty. The dragon's roar, as it came to be known, symbolized the rapid and seemingly ceaseless growth of the Chinese economy. This growth, beginning in the late 20th century and continuing into recent years, was nothing short of meteoric. A combination of factors contributed to this explosive growth. Industrialization played a significant role, transforming China from a primarily agrarian society into a manufacturing powerhouse. This industrial revolution was spurred by a wave of globalization that swept across the world, opening up new markets and opportunities for China's burgeoning industries. Government policies also played a crucial role in China's economic ascent. The government's strategic investments in infrastructure, education, and technology provided a solid foundation for growth. Policies aimed at attracting foreign investment and fostering innovation further fueled the economic boom. But perhaps the most significant factor was the sheer drive and determination of the Chinese people. From the rural farmer to the urban factory worker, from the tech entrepreneur to the government official, the people of China worked tirelessly to build a better future for themselves and their country. Yet, even as we marvel at the dragon's roar, we must also acknowledge the challenges that lie ahead. The Chinese economy, like all economies, is not immune to the laws of economics. The forces that propelled it upwards, industrialization, globalization, and government policies, are now being tested by a host of new challenges. These challenges, which range from a slowing global economy to internal pressures for reform, are causing many to question whether the dragon's roar can continue unabated. As the Chinese economy navigates these uncertain waters, the rest of the world watches with bated breath, acutely aware of the global implications. But as the old saying goes, what goes up must come down. This applies to economies too. The dragon's roar may have been deafening, but even the mightiest roar can fade. The first signs of trouble began to appear in the Chinese economy in the mid-2010s. As the world's second-largest economy, any tremor in China's economic foundation would send ripples across the globe. And these tremors were first felt in a series of economic indicators that began flashing red. In the heartland of China's industrial might, factories began to slow their relentless pace. The boom of China's manufacturing sector, which had once been the engine of its economic growth, was losing steam. The production lines were not humming with the same intensity. Reduced industrial output was the first signal that all was not well in the dragon's den. Next came the falling property prices. For many years, China's urban landscapes had been transformed by a frenzy of construction. Skyscrapers sprouted like bamboo shoots after a spring rain, a testament to the nation's economic vitality. But then, the unthinkable happened. The housing market, once a reliable source of wealth and prosperity, started to falter. Property prices began to drop, leaving a trail of unfinished projects and a cloud of uncertainty. And then, the stock market crash of 2015, an event that sent shockwaves through the global financial system. The Shanghai Composite Index, a barometer of China's economic health, plummeted dramatically. Billions of dollars in market value were wiped out in a matter of weeks. The dragon, it seemed, was not invincible. Behind these events were complex reasons. An over-reliance on debt-fueled growth, a slowdown in global demand, and internal structural issues within the Chinese economy were all factors contributing to this economic deceleration. Despite these warnings, many thought the dragon could still fly high. Optimists believed that China's government, known for its economic wizardry, would steer the dragon back on course. But as we'll discover in the next scene, even the most potent magic has its limits. The fall had begun, and the world was about to feel its impact. In 2021, the Chinese economy faced its biggest challenge yet, the housing market crash. A potent mixture of overproduction, sky-high indebtedness, and government policies set the stage for this sudden downturn. Let's take a closer look. Over the years, China had been building more houses than there were people to occupy them. This rapid overproduction of property created an inflated bubble in the housing market, ripe for bursting. Property developers, both large and small, were churning out new buildings at an alarming rate, fueled by an insatiable appetite for growth and profits. On the flip side of this coin, we find the issue of high debt levels. Chinese citizens, seduced by the promise of property wealth, were taking on large amounts of debt to invest in this booming market. This created a dangerous cycle of borrowing and spending, which was only sustainable as long as property prices continued to rise. However, the government's policies played a significant role in this crisis. In an attempt to control spiraling debt and risk in the financial system, the Chinese government began tightening lending practices. This move left many property developers and homeowners in a precarious position, unable to repay their loans and leading to a wave of defaults. The impact of the housing market crash on the Chinese economy was severe. Property development, which had been a significant driver of economic growth, came to a screeching halt. Unemployment soared as construction companies and related industries were hit hard. Individual investors who had bet their life savings on the promise of property wealth found themselves in a financial quagmire. The ramifications extended beyond the economy to the lives of the common citizens. Many found themselves stuck with properties that were worth less than their loans, a situation colloquially known as being underwater. The dream of financial prosperity through property ownership quickly turned into a nightmare of debt and despair. As we close this chapter, it's clear that the housing market crash was a significant blow to the Chinese economy. The once roaring dragon of the East seemed for a time to have lost its fire. Opening. As the world's second-largest economy, China's problems are not just China's problems. In the interconnected world of today, the ripples of China's economic turbulence extend far beyond its borders. The global implications of this slowdown are vast and varied, touching corners you wouldn't ordinarily think of. Let's start with global supply chains. China is often called the world's factory for a reason. It's the epicenter of global manufacturing, from the tiniest microchip to the largest shipping container. An economic slowdown in China could disrupt these supply chains, leading to product shortages and increased prices for consumers around the world. Next, consider the stock markets. China's economic health is closely watched by investors worldwide. A crisis in China could trigger a domino effect, causing stock markets globally to tumble. In this age of globalized finance, a sneeze in Shanghai can turn into a cold in Wall Street. Then there's foreign investments. Over the past few decades, China has been a major destination for foreign capital. If China's economy crashes, these investments could go down the drain, causing significant losses for investors around the globe. And let's not forget the potential for a global economic crisis. China's economy is interwoven with economies worldwide. A major slowdown in China could reverberate around the world, slowing global growth and potentially triggering a worldwide recession. In essence, the stakes are high. The health of the Chinese economy is not just a domestic issue, it's a global concern. The world is watching closely, hoping that the dragon will regain its strength and continue its flight. But the path ahead is uncertain. The Chinese government will need to navigate this crisis carefully to avoid a hard landing. The world can only wait and see, bracing for the potential impact. Closing. The dragon's fall could shake the world. Is this the end of the Chinese economic miracle? This is a question that has been echoing across boardrooms and international forums. As we delve into the potential future scenarios for the Chinese economy, it's essential to consider the possible steps the Chinese government could take to stabilize the situation. In the face of this economic downturn, the Chinese government has a set of tools at their disposal. They could choose to stimulate the economy by increasing public spending, cutting taxes, or lowering interest rates. Or perhaps they might opt for structural reforms, aiming to increase productivity and competitiveness, while also addressing deep-seated issues such as corruption and inefficient state-owned enterprises. However, these measures come with their own set of challenges. Stimulus measures might lead to the creation of zombie companies, kept alive only by the influx of cheap credit. On the other hand, structural reforms could be politically challenging and might lead to short-term economic pain before the long-term gains materialize. This is not just a domestic issue. The ripples of the Chinese economy touch every corner of the globe. As one of the world's largest economies, a slowdown in China could potentially trigger a global recession. Countries heavily reliant on China for trade, or those with significant investments in the country, could find their own economic health in jeopardy. But let's not forget the Chinese dragon has been known to surprise us before. It has weathered global recessions and internal crises, always emerging stronger and more resilient. The current situation may be a test of the dragon's mettle, but it also presents an opportunity for China to transition to a more sustainable and balanced growth model. In the face of these challenges, the world watches and waits. Will the dragon retreat into its lair, or will it rise, reborn from the ashes of its old economy? The global economic landscape is poised on the brink of change, and the direction it takes will be influenced heavily by the path China chooses to tread. Only time will tell if the dragon can rise again.